Hi, it's Nathan Goldstein. I'm CEO of Vested Business Brokers. We help people buy and sell privately held, profitable businesses. The question of the day today was, could you please explain multiples and how multiples work? Privately held businesses sell based on owner's discretionary cash flow, the benefit to the operating owner. So what you would do is you would take all the income that the business makes, like let's say for instance the owner or manager or the owner of the business takes an officer's salary of $150,000 a year. And then after they pay payroll and all the expenses, let's say there's another $50,000 there. So now it's $200,000. And then there's what we call add backs. And add backs are benefits that a seller would have. Like for instance, if he pays his car through the business that you're not going to have, that has to be added back. If he pays for any benefit that he would take, health insurance, life insurance, disability insurance, those are all add backs. So we would get to a particular number. So let's say that with all those add backs, it adds another $25,000 for the year. So now the guy's at $225,000. And let's say the business, now every business trades at a different multiple. What do we mean by that is, like for instance, companies that are more absentee owned will trade at a higher multiple than a company that has to be run by an operator, by the owner. So if you have a business that you have that's an absentee run business, it will always trade at a higher multiple because the person who's buying the business will have the right to keep his regular job, and this would be added income instead of his whole income. Does that make some sense to you? I hope it does. We'll be delighted to answer any questions that you might have. Now, those multiples are generated by what we call here at Vested a moving market. Moving markets are generated by how many listings we have in a particular market, what geographical area that the business is selling in, and we peg it in a live moving market. So we can tell you at Vested what the average cost of goods is, what the average payroll is, what the average expenses are, what the benefits to the owners are, and then we come to what's called the multiple. And then we take whatever the benefit is, we times it by the multiple, and that's typically how we come to the price. It's magical, but it really, really works. This way, you're not overpaying for the business because you're paying exactly what everybody else would be paying in the moving market. Now, when I first started this business 11 years ago, like car washes were trading in high 5 to 6 time multiples. Today, because we peg it to the moving market, they're trading in the 4 time multiple because most of them are run absentee. But please, we could tell you the statistics, we could show you the statistics, we could bring you on our back end and show it to you so you can get comfortable with it. We want you to be able to do all your due diligence, take your time. That's the most important part of any deal that we're going to have with you, is to make sure that you understand how the revenue is generated, you could prove where the generated revenue is, and you feel comfortable with the numbers. Hire professionals. We strongly suggest that you get a competent accountant to help you unwind all the financial information that a seller has given us. These are their representations, not Vested's, and we want to make sure that you are comfortable with those numbers. I wish you luck in your journey. Good luck. Thank you for joining us today.